Hub, coming at you live at 5:44 in the morning in Leander, Texas. And it is Monday, March 1st. It's already coming into March of 2021. This year so far is blowing by. It's incredible. A lot of stuff happening all over the world, and especially in the crypto world. So, I have something to talk about every single day, which is why I'm doing this Monday morning broadcast every single day. I'm not claiming to be a financial advisor or an authority in any of this stuff by any means. If you've watched any of my videos, you'll see that I make just as many mistakes and assumptions and incorrect statements as anybody else, and more. But I'm always open to correction and learning in the comments, and I always respond. And as long as it's not spewing toxic hatred, I am more than happy to have a conversation about things I say. So yeah, let's get started with that. I'm here to learn, and I'm documenting my crypto journey just for posterity and just to help anybody else not make mistakes that I make along the way. So that being said, let's take a quick look at CoinGecko, and got Bitcoin at $47,800. Okay, so I think it may have found its bottom for now. Let's hope that's the case, and let it settle there. Let it kind of gain some momentum, and so it can shoot back up. I'm not a TA dude. It's not my shtick, but I watch enough TA videos to kind of gather up some of their lingo and things that they say, and be able to gather just some basic trends, patterns, and stuff like that. So, yeah, let's see here. Ethereum at $1,523.49. Ethereum and Binance Coin have been going at it because Binance came out with the Binance Smart Chain, which is directly a copy of MetaMask, basically the Smart Chain wallet, and it's quicker. Binance's Smart Chain is quicker, and it's cheaper right now than Ethereum. But Ethereum is first mover, well known, has the network effect, is decentralized. But right now it's just the network is clogged, so the gas prices are super expensive to do any transaction on there. Ethereum was meant to be kind of a democratic decentralization of smart contracts and the crypto marketplace, but it's kind of gone against that lately because you basically got to be rich to do any type of transactions on it right now. So anyway, we got Cardano sitting at $1.27. The last episode I talked a little bit more in depth about Cardano and what could possibly be driving the spike in value, because Cardano right now, as of this point, doesn't have any specific working projects on there yet. It's just been all white papers and research and peer review, back and forth. So now that smart contracts, as of I think today or tomorrow or something, are going to be enabled, and devs will be able to just roll into the Cardano platform and build their projects on Cardano. And they've made it super easy. In my last video, I demonstrate the Marlowe playground, in which a non-developer could come in and create no-code applications using drag-and-drop programs. So it's pretty cool. Tether, a stablecoin, whatever. Polkadot. I need to create a video on Polkadot, but a lot of people say it is also an Ethereum killer. Let's see how many Ethereum killers there are up here. So there's Cardano, there's Polkadot. I don't really see any others. Cosmos, Solana. So, and then Theta could potentially be if it builds a huge network effect. I'm broadcasting on Theta right now. I'm a huge fan of Theta. Theta has just created smart contracts on their platform. They've created a Uniswap style DEX, decentralized exchange. You can mint tokens on Theta Network. It's super fast, super cheap. They have now this, Theta is based around a decentralized video content delivery network to solve the expensive problems and censorship and everything like that YouTube and Amazon and Netflix are bringing forth to the plate right now. So Theta solves a lot of problems. I see a huge future with Theta. Okay, and then Chainlink, we got that sitting at 2648. I believe that is also coiling up to make another moonshot because Theta is going to be allowing staking on their platform soon. And once staking gets put on to Chainlink, man, no end in sight, man. I've been accumulating Chainlink for quite a while, and right now I'm sitting pretty, but I think I'll be sitting gorgeous once Chainlink staking gets put on their platform. So for the average Joe. So anyway, yeah, that's that. Interesting stuff, man. Let's go to a little bit of some of my Twitter bookmarks here. Um, I saw this post by Lark Davis right here, and Lark, he has his own podcast or YouTube show. I've been watching him ever since I started getting into crypto. Interesting dude. He always has really smart things to say, and he helps teach. He's taught me a lot as a less experienced crypto head, and then whenever I was first starting out as a complete noob, I was still able to understand things that he was saying. So he makes it communicatable to a noob audience as well. But anyway, my kombucha and an apple. So anyway, Lark points out on Glassnode, and if you aren't familiar with Glassnode, it's basically a website that tracks. And if you're a chart type of person, you love charts and all that crap, and the stats, you're a stats guy. This is the website for you. It tracks, buying and selling on chain of the explorers of Bitcoin and other coins like Ethereum, and they have a whole list of them. But it's free, and then there's like a tiered service as well, so you can get more in depth with it. I can barely read the charts as it is, so I don't think I need more advanced stuff. But Lark does this chart here. Miner net position change. So said Bitcoin miners selling has stopped for the first time since late December. Today they switched back to holding. This is bullish for a price reversal. Interesting stuff. I don't really know exactly what this means, but it basically means miners aren't dumping their coins out on the market. They're trying to hold on to them. And this should increase the value of Bitcoin again. And this just started again. So interesting stuff. May see another Bitcoin moonshot. Yeah. So I'm down for that. He's got his little spammers there. Also, somebody in the comments pointed out. Hold on, not really sure where it is, but it's down here somewhere. Somebody pointed out that miners are now getting hip to the fact that you don't have to sell your Bitcoin, folks. You don't actually have to sell any of your cryptocurrency. That's what DeFi is for, decentralized finance. You can lock up your cryptocurrency as collateral and borrow against it and borrow US dollars or whatever country you're in, and use that as liquidity to do life. To do life. Yeah. What was I saying before I talked about doo-doo? My favorite subject. You don't have to sell your crypto. That's what DeFi is for, and you can lock up your Ethereum. It just depends on what DeFi app. So miners, they have to they use a lot of power, and they have a lot of overhead in order to mine. You wouldn't think, oh, it's just computer mining. What could they possibly do? Just turn on a computer? No, these computers are super high powered. They need large facilities to mine Bitcoin. They use as much power as a small country does. They have a lot of overhead. So they have been having to sell their Bitcoin in order to be able to pay for their bills. Now they don't have to sell the Bitcoin. They can lock it up in DeFi platforms and borrow against it for liquidity. And then also the demand for Bitcoin has gotten so high with institutions rolling in that they're selling off their Bitcoin as it comes out of the miner, and it has been driving the price up as well. So, I mean, I don't know enough about all this stuff to really speak authoritatively, but this is just some things I'm gathering just from reading comments and then, listening to people like Lark Davis. So interesting stuff here. Peaked right back down in the red there, as you can see in that last little speck. So, I don't know. We'll see. Maybe he was jumping the gun by pointing that out. Whatever. All right, so let's go on to another article I found here that I thought was interesting. Privacy protocols and blockchain technology, a powerful duo. And again, I find a lot of this stuff just scrolling through Twitter at night, and then I find from there just things I want to talk about. Oh, yeah, so I'll get back to the other thing. So yeah, focused blockchain projects coming up in 2021. Privacy has been a huge topic lately on the blockchain, especially since the government entities are starting to get involved and they're creating their own CBDCs, and then the whole concept of programmable money and money built on with smart contracts enabled presents a lot of ethical questions about money in general, because right now we just have cash. We can pay give a $20 bill at the corner store for a gallon of milk and a 6-pack if that's your thing, and then you get change back, and everything's done completely anonymous. You pay them with cash, right? That is the UTXO model on Bitcoin, unspent transaction output, and that's how it is. It's just cash given, change given back, and transaction done, voila. And the only evidence that they have of you being there is a video camera at the Quickie Mart. But an account model, which is what Ethereum is based on, is like your debit card, and you swipe your debit card. There's no excess currency given, like a $20 bill and change given back. It's just $5.98 debited from your account, and that's it. So with that type of stuff, privacy is of the utmost importance, because every single time you do a transaction, everything is 100% traceable. Everybody sees everything you do. And then also the blockchain is public as well. And all you have to do is go to any type of blockchain explorer, and anybody can see what you have in your wallet, and if they know your public key, and then they can see all your transactions you've made. So there are applications right now being in projects right now focusing specifically on privacy. And there's also a concept called front running. Front running is a pain in the ass, and it's pretty rampant on a lot of decentralized exchanges, because there are bots that watch on the blockchain explorers for these transactions, and they watch these exchanges like Uniswap, and they look for people trying to do a trade on an exchange like Uniswap on with Ethereum or something, and then they will front run, which means they will put in a transaction right before you do with faster speed, and then they'll drive up the price of something, and then they'll create an arbitrage opportunity after when your transaction goes through. Then they'll put another transaction through right behind yours that's a lot less, and then they'll pocket the difference. I'm not really sure how to explain it and how the mechanics work, but that's called front running, and it is something that these bots do and these arbitrage traders do to pocket a little bit of pocket change. And it's not much, it's barely anything, but cumulatively it builds up and it creates a problem. And if there were privacy in place, then this front running wouldn't happen. So interesting stuff. There's 4 different applications and projects here that are popping up. Let's see, as the majority of the world's population remains largely stuck indoors, it is surprising that more time is being spent than before. Okay, whatever. The fight for data privacy is becoming more than ever before with the emergence of blockchain technology. Now, there are now ways to secure and distribute fragile data that was previously not available. We have witnessed the emergence of various pioneering projects that look to regain equilibrium and put the power back into the hands of the user. Below are 4 of the most promising blockchain projects that have a laser focus on user privacy. Manta Network. This is viewing sensitive bank account information entails providing that you are the owner of said account, and consent is required if anyone other than the owner wants to view the transaction details and such. In the crypto world, the emergence of decentralized finance can be viewed as a somewhat double-edged sword. The world now has the power to borrow, lend, and trade on platforms that are completely decentralized and do not rely on trusted intermediaries, saving time, money, and opening the opportunity for a truly borderless finance. However, at the same time, anybody who knows your digital wallet address can see a history of your transactions, trace transaction journeys, and see your assets with ease. This has led to many problematic issues in recent months, including rising scams in the DeFi space of more than 100 million stole from DeFi projects. It's important to provide businesses and individuals the option to conceal their personal data should they wish to do so. Web3 Foundation winner grant winner Manta Network is a project that looks to do just that, in part by obfuscating wallet addresses, but with a longer term to introduce a DeFi privacy stack, a decentralized privacy stack for DeFi. So they're trying to help put privacy on the DeFi and by hiding wallet addresses. So recently I just saw an article in which somebody got Mark Cuban's public key and was able to look at his wallet address, his Ethereum wallet address, and see everything that he had in Ethereum. And it was basically just a bunch of crappy little projects and then some Ethereum. And it wasn't a big deal, but that's his business. It's what the type of projects that he has in his Ethereum wallet and the balances of it shouldn't be anybody else's business, but it was. And people looked it up, and then they made a big deal about what Mark Cuban had in his Ethereum wallet. Whether or not that is a big part of his life or not, we don't know. But the fact that people were able to look it up. So this will obfuscate wallet addresses on DeFi platforms. So if you're doing business on a DeFi platform, I guess it will kind of conceal your wallet address. The protocol's first major product is an automated market maker DEX, like Uniswap, called Manta Swap, that will preserve user privacy, aiming also to tackle issues such as front running, which I just explained, on exchanges, as trading bots will not be able to see others' trades. Having successfully closed a $1.1 million seed round, I want to do a seed round, with investors including Polychain Capital, Three Arrows Capital, and Alameda Research, Manta Network will be delivering the first version of its testnet before the end of Q1. So this one's still in the works. When people say that crypto is not legitimate and all this stuff, you see these major investors, Polychain Capital, Three Arrows Capital, and Alameda Research. These are, it's a lot of money, man. And these big guys throwing a lot of money into crypto projects kind of rebuts anybody that says crypto is for degens and just kids. So yeah. So and then there's another one called Fractal Protocol. I'm going to put all these links to the link to this article in the video description. So it's not only DeFi fraudsters that want to access user data, it's the marketers, the people trying to scoop up your data so they can target market you and shoot you ads about Boise, Idaho, because you happen to mention Boise, Idaho once in in passing in your conversation that had absolutely nothing to do with Boise, Idaho, but then suddenly now you're seeing all these ads about Boise, Idaho for some reason. We have become comfortably numb, handing over much of our browsing data and internet shopping preferences on social media platforms. Research highlights that only 5% of European users refuse cookies. And that is another thing too. You can refuse cookies. Anytime that little cookie window pops up, basically they're just asking you, can we track you? Can we get your info? You can just click X. It's not going to make the website function any different in most cases. So the duopolistic nature of the ad market sees Facebook and Google dominate with huge market shares. Google in particular has a whopping 86% share in the search engine market. By controlling some of the internet's biggest areas, and these industry giants are able to corner users into handing over data out of a lack of alternatives. Extortion, basically. Users may be free to use other browsers, social media platforms, or plugins, for example, but in doing so, they will experience a lack of overall compatibility, and this utility ceiling often results in many of us giving up and agreeing to whatever terms and conditions are imposed on us. So Fractal Protocol is being built on Polkadot, and it's working alongside a Web3 protocol, Ocean Protocol, and Kilt Protocol. I don't really know much about Kilt Protocol, but I do know that Ocean Protocol is a way that you can control your data, and you can buy and sell data on the data marketplace that's decentralized on Ocean Protocol. I do have several videos where I talk quite a bit about it and go more extensive into it. It's about due time to do another Ocean Protocol video. The protocol introduces an incentive system that rewards users for their high quality data while simultaneously giving publishers and advertisers access to targeted data away from the siloed data sets controlled by Google and Facebook. So, in the big quotes, users need to be empowered to control the data flows, free to switch between services, and fairly compensated for sharing their data. People don't realize data is the new oil, and all this data that you do every single day with your identity is worth something. So capitalize it. Don't let yourself be put into slavery when you hold something valuable yourself. And then Secret Network, I'll get to it in a second. As previously mentioned, the immutability, security, and autonomy offered by blockchain technology is a revelation in so many ways, but the transparency that comes along with it can be considered somewhat as a gift and a curse. The lack of confidentiality on blockchains can limit the usage of technology for institutions and businesses looking to process sensitive business and user data with privacy-related dApps on the Ethereum blockchain unable to comply with the GDPR. The Fala network is the first confidential smart contract network built on Substrate. The project looks to provide confidential computation and data protection services for enterprises and users as one of the Polkadot network's parachains. So Fala Network has two main products: PLibra, a confidential computation component, and then Web3 Analytics, a data analysis tool to analyze user data without invading personal privacy. So this one's more business oriented. So interesting stuff here. Then we have Secret Network. This one, the balancing act of privacy and transparency, is a difficult task in the world of DeFi and cryptocurrency. For larger institutions and the everyday investor to accept this decentralized mechanic, there arguably needs to be a degree of transparency and accountability. But on the other end, the spectrum, making it mandatory to tie users' personal identity to their digital wallet, somewhat being proposed by the U.S. government. Again, the programmable money, your account, your federal account on the Fed coin being attached to your identity so they can watch when, who, why, what, and where you do your transactions and trace your every move. It's against the core ethos of cryptocurrency. Secret Network's looking to strike a balance between the two. It's a protocol focused on DeFi, and dApps built on the platform can utilize encrypted data without revealing it to anybody. The project essentially is an expanded continuation of Enigma. It's a layer 2 scaling solution for Ethereum. It's just basically offers privacy. You can put your tokens, your Ethereum and other tokens on the Secret Network. It basically wraps it as a secret coin, and then from there you can do a bunch of different type of transactions, trades, swaps, DeFi, lock it in as collateral, pull it out and get cash against it, then switch it back over to the Ethereum chain and then cash it out for US dollars or whatever you want to do. Basically privacy preserving secret smart contracts. I did a whole video on Secret a while back. Just scroll back through my videos and you can get more in depth on Secret Network. But what I found was interesting in the comments, okay, of these 4 projects, the only one currently on mainnet right now and active is Secret Network. So that is probably something worth looking into. In the comments as well, let's see here. Let me pull up this tweet just so I can take a quicker look. Okay, so, anytime anybody posts anything about Secret Network, all the Secret Network community will come out and totally shill Secret Network. And Secret Network has a lot of shills, and but it is a legit project, so don't let the shills kind of turn you off. All this Roy Lichtenstein inspired artwork coming from Secret Network here, color schemes and stuff. That's their shtick, and that's what they do. Secret is obviously the winner from an investment point of view. Just look at what has actually been built just in the past year, not what projects claim they will build. Secret Network is the only one actually live. Don't get caught up on the narrative and look at the value. Exactly what I was saying. Don't get caught up on what shills say, and actually look at the project, because it is a good project. Secret looking like a good price right now. Get some while you can. And there's nothing wrong with somebody shilling a platform that they believe in, and I understand that, and Secret is a good platform. It's just I get turned off by shills big time. The hex shills kind of turned me off. VGX Voyager wallet is a great wallet and I use it, but the shills, God man, it just turned me off. So be careful when you're shilling a project to just like, you will sometimes do your project a little more damage than you may intend. So somebody linked this article. Intel VGX is vulnerable to an unfixable flaw that can steal crypto keys. It says Secret uses third-party proprietary software SGX solution known for its vulnerabilities. I will not touch this one. So this person will not touch Secret because of this. This software that is vulnerable to an unfixable flaw. And Secret relies on a trusted execution environment. Basically, it's a black box on your computer, on the processor that does secret transactions, and that's how the identity of somebody is protected whenever they wrap their tokens in the secret network protocol, and they do their biz on the secret network. So trusted execution environment is a standard which creates an isolated environment that runs in parallel with the operating system, providing security for the rich environment. To prevent simulation of hardware with user-controlled software, a so-called hardware root of trust is used. This is a set of private keys, so-called endorsement keys, which are embedded directly into the chip during chip manufacturing. It goes into the details. It cannot be changed, and whose public counterparts reside in a manufacturer database together with a non-secret hash of a public key belonging to a trusted party, usually a chip vendor, which is used to sign trusted firmware alongside the circuits doing cryptographic operations and controlling access. It's pretty built into the chip. Let's see here. If the hash, so then they talk specifically about the hashes and the public key of it and the private key. The actual chip hardware manufacturer owns the private key, I guess. The public key of the vendor is provided at runtime and hash. This hash is then compared to the one embedded in the chip. If the hash matches, the public key is used to verify a digital signature, and it goes in. And hello, Bob. It gives a graphic. Of trusted vendor-controlled firmware, such as chain of bootloaders on Android devices or architectural enclaves in SGX. The trusted firmware is then used to implement remote attestation. So, and then this article here, Intel SGX, which is right here, architectural enclaves in SGX. So Intel SGX, their architectural enclave, basically, is vulnerable to an unfixable flaw that can steal crypto keys and more. So if secret network is built into this SGX here, and that SGX is vulnerable to an unfixable flaw, then that kind of shakes the very foundations in which secret network is built on. So I would be interested to see some kind of rebuttal to this, and because this is pretty hard hitting, but I mean, it could also be like very far-fetched and one of these, 1 in a million chance possibilities. So I don't want to just completely overhype something that will most likely not happen and maybe a 1 in a million chance or whatever, because some people tend to do that. They'll post an article, scream the sky is falling on something that will very likely not happen. So I don't want to sit there and over exaggerate. So for the past 26 months, Intel and other CPU makers have been assailed by Spectre meltdown and a steady flow of follow-on vulnerabilities that make it possible for attackers to pluck passwords, encryption keys, and other sensitive data out of computer memory. On Tuesday, researchers disclosed new flaws that steals information from Intel's SGX, short for Software Guard extensions, which act as a digital vault for securing users' most sensitive secrets. So down at the root level, at the microchip level, there is where your data is stored and transactions happen, and that's what Secret Network is building its technology on. There's an issue. So let's follow that and see what happens. The beauty of innovation and technology is, you build something great, and then here comes the dark forces, the dark and the light, constantly butting heads against each other, and helping innovate each other further and further as they continue along this never-ending process of refining the light while the dark continues to try to attack it. White hat and dark hat, and black hat. So anyway, okay, that pretty much does it. I need to get on about my day, and I got to get to work. Still got to take a shower and all that crap. So tomorrow I'm going to talk a little bit about the Matic network. I've found some really cool stuff on that, and it's a layer 2 solution to help fix some of these Ethereum gas problems. Oh yeah, and then just one last little quick tweet I thought was kind of cool and interesting. Let's see here. Zachary Dash said, today I was scrounging around for domain names and discovered DeFi.io redirects to Goldman Sachs. What does Goldman Sachs have planned in the future? Are they going to own DeFi? Is that why they bought DeFi.io well in advance? Those big guys tend to do stuff like that. Yeah, I'm on to you. So anyway, you have a good day. Hit me up in the comments, do the like and subscribe and all that crap. It helps me. I'm not bumming money or anything. So any type of like or thumbs up will help. So yeah. I have a job. I'm not trying to bum money from you. So yeah. All right. You guys have a good day and be nice to each other and do well and read. The more you learn, the more you earn. Right? Okay. I'll talk to you tomorrow. All right, bye.